You're live. Go for launch. All right, cool. Hello, everyone. I'm Robert. This is Tyler. And welcome to devEco Live. I'm going to go back here real quick. I want to start this off by saying anything that Tyler and I express during the course of this call does not reflect our employers. This is a community call, a personal call, and we're going to have some fun talking about some pretty cool topics. The structure of this particular meeting is going to be a lightning talk. We're going to have about 4 topics. We're going to talk about 10 minutes for each one of these topics, and then we'll see kind of how it goes. Of course, if there are any questions, feel free to post them inside the chat window on YouTube. If you do enjoy the content and the things that Tyler and I are talking about, feel free to subscribe to the channel because we do plan on bringing talks like this to this YouTube channel in the future. So yeah, hope you all enjoy. Tyler, do you want to say anything? You want to give a little introduction?
No, yeah. Hey, thanks, Robert. Yeah, so my background is in embedded software. That's how I met Robert, actually. So yeah, I'm really excited. I think this is going to be a neat live stream / podcast where we talk about tech topics. Like today, we have a lot of cryptocurrency focused topics, but I think we're going to expand on that. And again, like Robert said, if you've got any questions, like as we're going here, I'm monitoring the chat window, so just throw them out there. Write a comment in on the live stream, like our stuff, hit the subscribe button. So as we do this, in the coming weeks, you can get notified. So let's get started.
Awesome, cool. So first topic, as you can tell, I have my Bitcoin gear on here because there's some pretty cool stuff happening in the Bitcoin world around the halving that will be taking place right around May 12th, if I'm correct. There, it depends on the block height of the chain, but so we wanted to talk about 4 topics. The first one is going to be just Bitcoin in general. Tyler is just like this wealth of knowledge around Bitcoin, and so I'll be picking his brain on some of this stuff here. Hopefully he can share some fun stories. Then we're going to talk about the halving. So for people who aren't familiar with the halving, you'll get familiar with it and why it's important in the Bitcoin world, and I think just in general in the crypto world. And then after that, we're going to go into mining. We want to talk about past mining and current mining and possibly future mining. And, I get this question all the time. It's like, hey, should I be mining right now? Is it, as the price of Bitcoin fluctuates all over the place, people are thinking whether or not it's viable to mine Bitcoin on their computers. And so I think that this is a very important question to be answered. And then the last one we're going to talk about is altcoins. So for people who are following other cryptos and other blockchains and, the evolution of the Bitcoin blockchain. And so, we'll talk about that as well. The way this is structured, as I mentioned at the beginning, is we have 10 minutes per topic. I don't think Tyler can see the countdown, but for you on YouTube, you can see the countdown. So there will be a 10-minute timer. I'll just probably interrupt Tyler when we hit that timer. Sound good?
Sounds good.
Okay, so here's the button. Boom, Bitcoin pops up at the top of the screen. I'm going to hit the timer. And let's hit start. Okay, it started. Perfect. Tyler, where were you in 2009 and why didn't you call me?
Well, I was out of college, working my first job, doing software engineering, and we were coming out of one of the biggest recessions that we've had in this century, and I just kind of was interested in, like, why did the financial system fall apart? Like, what did we do here? How did we go so wrong? And, it was just like, wow, I learned a lot about the Federal Reserve and how it, was just printing money, and it wasn't a government entity necessarily. And, it was just like using the control of the supply of money to kind of control the economy. And honestly, it was like, wow, that kind of seems like, something that's going to implode at some point. And, then I was on IRC and some people started talking about this white paper that had posted on SourceForge, right? Which was like the original Satoshi white paper for Bitcoin. And so I pulled it down and I started reading it. And it was just like instantly, like by 5 minutes into it, I'm like, wow, this is like what the world needs for a currency because it can't be inflated, right? It's like there's 21 million Bitcoin forever, and it had a really neat deflationary policy I really liked. So like there's 8 digits of precision on a Bitcoin wallet, right? I don't know if it can be more, but I think it's just 8 digits of precision, which means that you divide up a whole Bitcoin into many, many small parts and use them for like small payments. Now, the thesis was, that it had to be expensive enough that these 8 digits of precision actually meant something or were worth something. But I like the idea because of a fixed supply. I mean, if you look at things like precious metals, where you've got like silver and gold, where there's like the idea is there's a scarcity of this, and so that's why it's worth a lot. Plus, it's used in a lot of different things as well.
So I've been so I hear your kind of point on this, right? Like you read this white paper and you thought, wow, this is amazing, deflationary asset, hard money. Looking at the inflation rates of government currencies and gold and silver, and when prices go up, you just go mine more gold, you just go mine more silver, and Bitcoin kind of seems somewhat similar to this. But I'm kind of curious, like what your take would have been, like devil's advocate, right? What if you were reading this from another perspective, like the naysayers? So people who read the white paper, what were some of the negative things that you think people could have drawn from this, if there are?
Oh, I mean, I got that all the time, right? Like everybody thought I was crazy in 2009, 2010, 2011, basically till like 2017. Everybody thought I was crazy, and it's really because it's just made up. It's just made up. It's on the internet, right? Like it's just internet money, right? That was what I'd get all the time, and then you had to explain to them that, like, okay, so what makes the dollar useful? Right? It's that somebody will trade goods and services for it, right? Like you say, here's $1, they'll say, well, I'll do whatever you want for this amount of money, right? And it's not because it's actually backed by anything, right? Other than the United States government in the case of the US dollar. So that was what I got a lot of, is like, I don't understand it. This seems like a scam. It's not actually worth anything. But what people didn't understand is that the value is perceived, right? It's how useful the currency can be. And I really thought, like, it was gonna take off, and I think where we first kind of saw that is when, do you remember when like Greece was failing, like their economy was failing, and like there was fears that the euro was going to go under? That's the first time Bitcoin ever really made a huge price increase, like to $1,600. And after I saw that, I was like, wow. I mean, people are convinced enough that hard money, like this is a hard money play, that they actually took their money out of euros and invested wholesale in the Bitcoin. So, over time, I think people, as we move into this digital age where, like, who touches physical cash anymore a lot of times, right? It's mostly on a card. It's digital payments. Like we're starting to move into more acceptance of kind of that medium. And so I think Bitcoin is it's filling that gap a little bit. And for the days, the years to come, people will become more acquainted with the digital payment side of things.
Yeah. So, I mean, like back to that point, or addressing that exact point there, I mean, saying, Bitcoin has no intrinsic value. Like this is kind of like the old money speakers. They say, oh, well, what's the intrinsic value of Bitcoin? Gold has intrinsic value. Silver has intrinsic value. But then people who compare it to a government currency like the US dollar, and you get, well, where's the intrinsic value of the US dollar? And then if you say Bitcoin's not tied to anything, well, the US dollar stopped being tied to the gold reserves a long time ago. And so, I mean, in essence, what is the US dollar tied to? And let's see when it picks up. The stream never really ended. It looks like YouTube just kept it going.
Yeah, it just looked like it was just spinning when we disconnected.
And let's see when it comes back. I don't even know who my service provider is, like whether it's Spectrum or Cox Digital Cable, whatever. But anyways, okay, cool. Looks like we're back on. So I'm so sorry, everyone. That sucked. I was just telling Tyler right now, that's never happened to me in a long, long time. So let me get the timer back up here real quick. Timer downloads. We have the stream timer, and what I'm going to do now is go back to. We're going to go to 5 minutes. We'll do 6 minutes because we were having 7 minutes. How about that?
Okay.
All right. So timer's back on. And where were we? Bitcoin.
Well, I think we're talking about some of the naysayers and the counterpoints to Bitcoin.
Yeah.
And we're talking about, it's not backed by anything. And then I made a joke in the chat that that's one thing that Bitcoin hasn't done in the last decade is gone down, right? Like zero downtime. I think the only time they ever had to do it is when Satoshi was around in 2012. There was a bug in the Bitcoin blockchain that could have actually exposed quite a bit of Bitcoins that he had to fix. It took 6 hours. But other than that, I don't think there's ever been any real downtime where you couldn't make a transaction. So that's
Tyler,
also some.
this brings up actually like a really good point here because, on the note of talking about naysayers and the fact that, people really harp on Bitcoin can't be changed. There's only 21 million and it can only ever be 21 million. But it is an open source repository and it has human maintainers who have the ability to change code.
Yep.
So how does this factor in? Maybe this can
Well,
kind of
so
lead into decentralization too, and explaining that, I guess.
you could make all the code changes you want. If the people who mine the blockchain aren't behind those changes, they're not going to accept it and upgrade their software, which means the chain continues on. So it's actually kind of a consensus between the developers and, like, I guess, if you want to say like the big players in the mining game, right? They have to be on board with this because mining provides network security for this whole thing. And so if they're not on board with the change, like if you try to say, okay, we want 25 million Bitcoin, they're going to say, well, no, because that's going to, what's in it for us? It's going to devalue our holdings and every coin that we mine is going to be devalued. So, there's monetary incentives. So it's not just the code changes that really can affect the whole blockchain.
How many nodes are out there right now?
I would have to look. There's quite a few. Gosh, I couldn't even venture to say how many nodes there are right now. I'd have to look.
I heard there was also some nodes running on satellites, like up in space.
Yeah, so I've got one of those setups. So Blockstream, they actually have 4 satellites that orbit the Earth. You can take like your Dish TV 18-inch satellite, and you have to put a new like satellite, I forget what receiver, transceiver receiver, yeah, something like that, on the end of it, and then you've got an SDR radio. So you run the coax cable back in your house. You hook up a Bitcoin daemon, and then they've got a piece of software that will actually it's like a read only, so you can get blocks from space. And then you can send messages out and stuff. If you have you have to have a special receiver transceiver to do the sending. But for the most part, super cheap. You can reuse a dish satellite with a different receiver on there, and then you can start downloading blocks from outer space. Essentially, really cool. That way, if you don't want to rely on the the landlines to get your Bitcoin blocks, that you can get it from space. So I mean, that's the only blockchain I'm aware of that can do that.
Cool. Yeah, so I mean, I guess in general, when talking about Bitcoin, there's various, I want to say, aspects about it that make it what I would call the best in some things, but not the best in other things. And so what I really want to address here is what we're called, use of it as money, right? Like money versus store of value, transaction speeds versus growth of the value of the coin itself. And so, I mean, looking at it this way, right? Like a lot of people like to compare Bitcoin as kind of like the digital gold, right? Because you don't spend gold at a store. Usually the assets that have the best store of value aren't the assets that are traded on a daily basis. Okay, and this is going to lead into kind of a topic that we'll talk about in, I think it's like the 4th lightning discussion here, which is altcoins and other alt chains. But, let's just kind of talk about Bitcoin as a store of value versus a transactional asset. So, I mean, you know a lot more about these transaction speeds and how many transactions can happen per second. So, could you tell us a little bit about that?
Yeah, well, I think I'll make a point here. So, if you want to buy silver, you buy it from like the COMEX vault, right? And you want to buy, I don't know, a large sum of silver or gold, right? Doesn't matter. A commodity, oil's a good example because it's been in the news lately. But you got to store it somewhere. And if you want to move your oil or your gold or your silver, and you have a lot of it, well, the cost might be more to move it than actually what the asset's worth. Now, Bitcoin's interesting because if it is truly a store of value, the fees, at least at the kind of current economic point, is really low. I mean, people can move billions of dollars worth of Bitcoin for a fraction of the price to do it, and that's where it's a good store of value, but it's also kind of a good source of money because, I mean, just think about shifting all of those assets around. You don't have shipping costs because it's a virtual asset. So I think there's something there that kind of gives it an advantage in some senses that you don't have to deal with a physical commodity to back it. And as we saw with the oil prices and the futures contracts, like sometimes that's not great to be holding it because there's physical storage costs that come along with those commodities.
On that note, I mean, like, how does an asset go into negative value? Like, I mean, people were making jokes and making memes about, oh, if I go to the gas station and fill up my tank, are they going to pay me $50 for doing that? I mean, like, how does it even work? How does a negative?
Yeah, that's a good one. And I don't fully understand. I'm not going to claim that like I'm an expert, but what I understand from those futures contracts is it's a physically settled futures contract, which means when you end up when the contract expires, like you physically have ownership of that asset. And what I understand was there was a few people maybe had been new to futures contracts that jumped in there, put some long future contracts on there, and then realized that, hey, like they're essentially getting margin call because they got to pay people to store this oil. And so now the price is going down because they're having to sell their contracts, and then it hits zero, and they're like, okay, people are like, well, we're not going to store it for free, so you got to pay us to store it, right? And then that's why that's those future contracts went to minus $46 a barrel or whatever they ended up hitting. So again, I'm not an expert on that, but that's just kind of the layman's understanding of kind of what happened with that whole oil fiasco.
Gotcha. And so now with 30 seconds left here on the clock here for this particular discussion, Bitcoin. And I think that we need to just make a separate stream for just Bitcoin, but let's do this real quick. Someone's looking to get involved in Bitcoin. Someone's looking to buy it. We are not financial advisors. I know you're not, I'm not. But if someone wanted to get involved in this, like, I mean, what would you tell them?
Yeah, I mean, it depends on like what you're comfortable with, right? If you want to do like your typical like KYC, so know your customer type thing, you can go through like Coinbase, or like if you're in the US, like, and you're kind of a more like regulated servicer, like Gemini is a good one. There's also localbitcoins.com. Like if that's, I kind of like prefer that because I'm old school, where it's like, hey, look, you either meet up with somebody in person, you do the exchange, and you buy from peer to peer. And I really like that because that's how you acquire assets when you're mining, right? Like when you get the reward, it's kind of like a peer to peer transaction. But obviously, there's dangers with meeting people in person and doing deals. So if you're weary of that at all, I mean, yeah, Coinbase is a decent option in the United States, or Gemini, and there's a whole bunch of other ones. But I have no affiliation with any of those companies. I'm just
when Tyler says Coinbase and Gemini, like these are just exchanges. So I mean, essentially, you can download like an app on your iPhone or go online on your web browser and visit these places, make your account, and they are tracked. So they're totally legitimate, backed by, in some cases, the government. And you pay taxes and go about your business as you would trading on the stock market. So it's very similar. Cool. All right. So I'm pretty sure that we'll look back at this video and say, dang, we missed a lot of things to talk about because we only had 10 minutes. But more reason to do this again sometime. And if you have questions, you can of course join us in the Discord server, which we'll share in the description below. We have a crypto channel there. Okay. Next topic here is the halvening. And I want to kind of like just give a little bit of a preface here because we kind of talked about Bitcoin and the value of Bitcoin. And, back in 2009, it was worth like less than a penny or something. Now it's worth $8,500 and inflation this, deflation that. But what does this halvening mean, right? So back in 2009 or so when Bitcoin was first released, if you were running one of these nodes or a machine that was mining coins, you were getting 50 Bitcoins per block?
Yeah, that was the block reward. Yep.
Okay, so take note of this, Tyler, because these are the things that we're probably going to want to explain here. Like, what is a block? Right? So back in 2009, when we first started mining, you would mine 50 coins per block. Now, over a certain amount of time, factored into the code, factored into Bitcoin, is a deflationary, let's call it parameter. So after every certain amount of blocks that are mined or solved, the amount of Bitcoins that you're rewarded per block is cut in half. And this is kind of like a milestone in the Bitcoin blockchain that happens every few years. And the next one that is going to happen is projected to be on May 12th, which is in less than 13 days from now. So looking at this, we thought that it would be interesting, and that's kind of why the theme of this talk is happening. So I'm going to start the timer now. I think that we should probably start by explaining like the mining process, and then we can kind of segue into the next lightning discussion here. But boom, timer's on, 10 minutes.
Okay, so I'll try to be like a really like layman's answer to what a block is. So imagine if you had a bunch of friends at a party and you're all trying to pay each other for something. So you basically say like I owe Robert $50. I'm gonna write it on a piece of paper and I'm gonna put it in this basket, and everybody does it. And then when we use a hashing algorithm that we know takes a certain amount of work to unlock or to solve this thing, and we basically run the hashing algorithm on the block, and then we present it to the network, and everybody in that room is like trying to solve it, like just basically trying a bunch of different things, and then eventually somebody does, right? And somebody says, I've got the answer. And what's really cool about this mathematical algorithm is that it's hard to solve, but it's easy to verify. And that's like the key to how this all works. And so when somebody says, I've got the right answer, it takes us less than like a second to be like, yep, that's the right answer, or no, that's not, right? And so once there's enough confirmations, you might hear that word, in blockchain speak, then you basically, the block is accepted. And at that point, then the block reward is released to the person that solved it initially, the first one that had the right answer. And so that's where the 50 Bitcoins back in 2009, that's where that number comes from. So let me explain like solo mining on the Bitcoin side of things here, and then like what pooling ended up happening. Maybe do we want to say that till later? I think we have another topic on mining. I can.
Yeah, we can probably save that topic, and I mean, unless it fits here, yeah, I mean, we can touch.
Well, it's sort of right. So like I'll just kind of briefly touch on it. So back in the day, everybody could just mine. Like they had their own node running, and they were able to mine. And so like when you solved a block, you got all 50 Bitcoins, right? Which was like really cool. But like now, because of the hash rate so high, like there's just no way, unless you've got billions and millions of dollars in mining equipment, that you'd be able to solve a block yourself. So they do pooling, where they like it's a whole bunch of these miners together that then when the pool solves a block, it's like distributed based on shares, like the number of solutions that you've submitted. So that's kind of how it's evolved over time, because it's gotten harder. Now with each like with the hash rate, well, I'll say that for the mining talk. We can talk about difficulty and all of that stuff. But basically, there's like what you were saying, Robert. There is a set schedule at which the block rewards decrease by 50%. So we've gone from 50 to 25 to 12 and a half, and now we're going to go to 6 and a quarter here on May 12th. And why that's important is like back in 2009, 2011. I mean, there was a lot of circulating supply, because each block every 10 minutes had 50 Bitcoins being released. And now we're going to go to a point where you've got 6 and a quarter Bitcoins being released every 10 minutes. And so it's going to half the supply that's in circulation that's being newly minted. And so typically what we see, and again, this isn't financial advice, but this is the starts of the bull runs. This is kind of like when Bitcoin really becomes, price positive, because, now the supply that's being created is slowing down. And, from the mining side of things, it makes it harder, because there's the same amount of competition typically when the halvening happens, and then you get half of the reward, right? So if you're paying your power bills, well, all of a sudden half of your reward is gone now, and then you have to consolidate. So it's a good thing. It's going to be really interesting. So like as this cuts in half, right? Eventually, it's going to get to the point where it's like transaction fees are going to fund the blockchain, and I'm really curious about that, because we can talk about altcoins later. But there's an altcoin that I'm like. Pretty enthusiastic about, that's actually getting to this point where the block reward is almost kind of be just like minimal. And I'm really curious to see what happens, because Bitcoin eventually will reach there. It's just going to be a much slower rate.
I mean, like that's basically to prove the theory, or to verify this, Bitcoin would have to be worth at some point hundreds of thousands of dollars, right? Because eventually that's how much electricity it's going to take to mine a single coin. Right.
Well, yeah, and in the original white paper, right, to use the 8 digits of precision, right, to like say, here's one Satoshi, right, like is worth something. You're right. I mean, Bitcoin has to be heads and shoulders above where it is today for that to make any sense, right? But it's interesting. I mean, I definitely think it could happen. We'll just have to see. I mean, as people start to become more interested in like, virtual payments and store value and investing, I think we're kind of starting to see that now because of what's going on in the markets. People are like, what's a good opportunity? Should I be buying right now? What should I be buying? And I think people are exploring that right now. And I think it's kind of a perfect storm for Bitcoin to be going through this phase. It's interesting.
So Tyler, I found a pretty good article here that I'm going to bring into my screen that, people on YouTube will be able to see, but you might not be able to see. But basically, this kind of summarizes it pretty well. It says a block on the Bitcoin blockchain is a file that stores 1 megabyte worth of Bitcoin transaction records. Miners compete to add the next block using specialized hardware to solve hard mathematical problems, producing random 64-character outputs called the hash. So that's kind of like I think what Tyler was trying to say at the beginning. That just adds a little bit more description to it. Now, talking about the halvening here, is that Bitcoin was first released in 2009 with a 50 Bitcoin per block rate. The halvening is programmed to happen every 210,000 blocks. So 210,000 megabytes worth of transactions per halvening. The first halvening happened in 2012, which brought the rewards down to 25 Bitcoin. The second halvening happened in 2016, which brought it down to 12.5. And then we're staring down the barrel of the third halvening. Now, interesting things here is that just as Tyler was touching on, is, to mine Bitcoin, it's a proof of work system, which again, hopefully you're getting all these key terms that you can go Google later, but proof of work system that requires electricity to run. And so, different places around the world have different electricity costs, and thus it becomes more efficient and more profitable to mine Bitcoin in certain areas over others. Like, even if you go across the United States as a whole, it might be cheaper to mine Bitcoin in Utah than San Diego or California because electricity costs. I mean, I don't know that. I'm not, quote me on that. But, I mean, that being said, we'll talk about whether mining can still be profitable, but, that's
do you want to hear a story about, kind of how proof of work was first kind of conceived?
I do.
So it was I was actually trying to suppress email spam, right? I think that was the first real implementation of this using Hashcash, right? Which was I think the first algorithm that Bitcoin used, or a modified version of that. But basically the idea was, okay, there's a lot of spam email, we're tired of getting it. So we basically, anybody who wants to send an email has to prove amount of work so that they couldn't do it. And the idea was okay, so if it takes back in the time, it was a 1 gigahertz Pentium machine, right? If it takes 2 seconds to do the proof of work to send an email out, that, a normal user wouldn't know that. They type their email, they press send, it takes 2 seconds, and then the email's gone, right? But if you're trying to send out 1 million emails, it's computationally intensive to send out 1 million emails. And so they had this big long discussion on the mailing list about, is this a viable solution? And in the end, what ended up happening is there's mailing lists, right? that are legitimate, that you want to be subscribed to, or marketing letters that you want to receive, right? So how do you blacklist, whitelist, those kind of, a central entity has to decide who's good and who's bad. And in the end, it was that doesn't make sense, right? It doesn't make sense to have some centralized entity saying you can send a lot of mail and you can't, because that'll become, corrupted and things like that. So the choice was to say, that's not a good solution. Well, years later, this is actually picked up and used for Bitcoin, right? As a way where it's hey, okay, you have to show proof of work to solve these blocks. It's actually kind of a really elegant way of reusing that technology that's existed for a long time, kind of in a new way to create a currency or store value. So I digress. I mean, that's a little background story there.
No, that's good. Yeah, I mean, you were around for a long time when all this happened. I mean, I heard also back in the day, what was it, Bitcoin was somewhat discussed or talked about in several books, where they're making predictions that the writers of these books could be Satoshi, and that goes into a whole nother topic. I mean, people who have no idea.
Everybody wants this digital cash. This is the the thing everybody wants, right? But the problem that they have is PayPal. I mean, PayPal wasn't very good in the beginning, and I mean it's much better now. But the problem is that it's still censored. If PayPal doesn't like what you're doing on there, they can stop your payments, right? So really, what you want, I mean, ideally, is you have a cash-like system where it's peer-to-peer. It can't be regulated. Now, there's pros and cons with that, right? I mean, you obviously open yourself up to the criminal element, but at the same time, the dollar in the cash form, right, can be done, can be moved between people without it being, tracked and stuff like that. So I really don't think that's an issue. It's just hard to think of that in a digital world because it makes it easier and it makes it faster. So I do see those arguments. But yeah, I mean, I think this concept of what Bitcoin has been sought after for a long time.
18 seconds left.
All right. Hey, that's good.
Yeah. Basically, long story short is that Bitcoin halvening, what it does is it treats Bitcoin, or allows Bitcoin to act as a deflationary asset. So over time, it becomes more difficult to get more Bitcoins then it becomes easier, right? So I mean, especially in these times, we're seeing trillions of dollars basically being issued by the U.S. government. Now, what happens if, like, let's just use easy numbers. You have $100 trillion that exist, right? U.S. dollars that exist. And then you print $10 trillion more. Well, you've essentially inflated or decreased the value of the original 100 trillion that existed before by $10 trillion, right? So with Bitcoin, you're actually only able to get less per year than you could have gotten in the future, right? I don't know if that made sense. Probably pretty convoluted. Anyways, yeah, that's the point. And this particular halvening, from what I have read, brings the inflation rate down below 2%. So this is the first time I think that an asset actually has a lower than the U.S. average and a lower than gold average inflation rate at 1.8% or something like that.
And that's only going to get smaller as the time goes on, right?
Yeah.
I mean, that's the whole idea, is that this is probably the last time we'll see it, with that high of an inflation rate. So
yeah,
exciting times.
Pretty crazy. Cool. All right. So next topic here. Boom, mining, and I think you have a lot of experience on this. Let's I think first talk about what mining is, and maybe try to compare it to what people might be familiar with, like printing a dollar bill or literally mining a chunk of gold, right?
Yeah. Okay. I mean, I think mining a chunk of gold is a good analogy. Almost like you've got to hire manpower, right, or machinery, or something to go and physically dig in the dirt, right, and search for something, right. And essentially, that's what mining is with all cryptocurrency for the most part. That's proof of work based, which is you have a bunch of computing power, which is your machinery or your manpower, and you're searching for a solution for that next block. And like what I think you had mentioned it earlier, where like blocks are linked together. It's like, if you're no programming turns it all, it's like a linked list, right? Where inside of one block that's accepted, it points to the new block, right? And like you basically sew them together when you add it to the blockchain. And so you're searching for that answer for this new block that comes up that the whole network is like searching for. And so the first one to find that answer is the one that will get the block reward, and so forth and so on. So mining is interesting because back in the day, you could do it on your laptop. I think you even alluded to that. Like you could just run the node on your laptop. You can run the node on your laptop now, but you most certainly cannot mine with your CPU power on the Bitcoin blockchain and expect to get any results in any sort of reasonable time frame.
And by this you mean like, because it is a competition, so you're competing with other people to solve the block. It's not like just because you're mining, you're guaranteed to solve a block. Like you might get lucky, but the odds of you solving a block now are rare, and so you're not even going to get one Satoshi denomination. You're not even going to get one Satoshi unless you solve a block.
Right, and that's if you're solo mining, right? It means you have to solve it, and so if you were to solve it, like just somehow you were able to solve it, you would get 6.25 Bitcoin, right?
Yeah, so you'd get the whole thing.
But the chances of you solving that are so low, it would take you, just an incredible amount of time to ever try to do that. So we have somebody in the comments that says they still have their ASICs plugged in, so even though they're not connected to an account, maybe you'll find something with that. Actually, that's a good point. So maybe I could just give a little background of what I was doing in 2009, 2010. So I started out mining on CPUs, and that was cool. And then I met this guy like on IRC. Probably doesn't remember me, but his name is Slush, and he kind of like created the first Bitcoin pool. And the idea was like, let's link all the computers together, and if we team up, like we'll have better results because there's more guesses that are happening. And so he kind of developed that pool software, and then we started running that, and then the GPUs and stuff started to come online, which made it faster than CPUs. And so basically, at each like evolution of technology, the previous one kind of were deprecated, like they weren't even worth running or spending any money on the power or money on the power for. So like GPUs came along, and then was just like, no one even runs a CPU anymore because it's just not profitable. And then, as somebody mentioned in their ASICs, so application-specific ICs, right? These are specific pieces of hardware that are made to do exactly one task and do it really well and do it really efficiently. So back in the day, I remember this very clearly. Like there was 3 companies, like there was like Butterfly Labs and 2 others, and it was basically like they were all taking pre-orders for ASICs. And if you knew about mining at that time, you were like, the first person to get an ASIC to work on this network is going to it's so much powerful than everything else. they're going to soak up all the blocks, right? I mean, no one was worried about a 50% attack back then because it just, wasn't valuable enough. But really what it was is like, you're going to have a 2-week window if you get an ASIC where you're going to control that network and get basically just, suck all the blocks in, because as those ASICs get distributed, the network hashing power is going to come up. The difficulty is going to rise, which I'll talk about in a second. And you won't, kind of everything is going to normalize. So I put pre-orders in with Butterfly Labs, Butterfly Labs, which didn't end up. So it's basically like you needed to go move with the market. Like whoever came to market first was going to be the winner, and you needed to back them. And so Butterfly Labs didn't end up going to market first with their ASIC. So I pulled my money out, and that's kind of where I was like, look, I lost in that game, right? That's kind of where I said, all right, it's not. If I buy an ASIC from the other company that made one, you're going to be behind the 8 ball, and it's not going to be worth it. Now, hindsight is I probably should have kept doing it and just pushed on, but
then
yeah.
So nowadays, like you see companies like Bitmain. Bitmain, I think, is a big chip maker for ASIC machines. That I think they actually dominated the market for a while, or still dominate the market. But nowadays, what you see is, and might be just a trap for people who aren't really familiar with it, who haven't done their research. People, as you say, the next generation or the next ASIC comes out, right? That literally focus fires the ability to solve these blocks. And then all of a sudden you see these companies literally tossing out their old ASICs. They become essentially worthless for that job. And yet they're selling them to people who are trying to solve blocks. Now, is that a thing?
Yeah, I mean, you can buy old ASICs. Like I've got some old Antminer ASICs in the garage. I actually got them because I was interested because they have like BeagleBone Blacks on top, right? Yeah. Which is like a low cost development board. And I'm like, oh, this is kind of neat. I mean, it'd be fun to run our own software on there. And you got a SHA-256 ASIC that can do a bunch of cool stuff. I mean, they're not very profitable. So the power that they consume versus the output, even if you pool up, right? It's going to be, you're going to lose money, right? At least at the current prices. It'd be cheaper for you to take that money you were going to spend on power and just buy it through an exchange like we talked about earlier, unfortunately. And so like, it's kind of like one of those things is you'll see the prices of the ASICs start to come down, like from Bitmain, when they're about to release a new one, because everybody wants the new one. So they're trying to get rid of their old stock and people buy it, and it'll work well for a couple of weeks. And then when the new ones hit the market, then the hash rate rises. And so this is what's cool. So it's like this like auto correcting algorithm inside the mining, well, not the mining software, but in the actual Bitcoin core itself, where it looks at the hash rate. And the hash rate is like the rate of solutions coming in just like really layman terms. And so as that rises, what happens is the algorithm adjusts. So like the difficulty to solve that block or that problem becomes harder, right? Computationally harder. So if there's a whole bunch of hash rate that hits on the network, then the difficulty is going to spike, and it's going to make it really hard to find the solutions. And what you'll see is that's adjusting. Like the block times don't stay at like 10 minutes. Like block times could go out to 30 minutes, right, before you solve a block. And then it'll slowly come back down, but the average time is about 10 minutes. So it's really neat to see it kind of like grow and shrink based on how much demand there is.
But so this is also an argument that people have made around quantum computing, right? So people say like, is quantum computing going to kill Bitcoin? But the thing is that, I guess like from what I've read about, and maybe you can verify this, is that if a quantum computer was literally designed and utilized for mining Bitcoin, and it literally mined Bitcoin like as quickly as possible, when those blocks are mined, all of a sudden you're going to see the next block take years to mine. And it's going to slowly increment as the quantum computer tries to do this. And then eventually quantum computers become obsolete because they've mined themselves out of the ability to mine. Is that?
So I think what you said is right. I think we're going to have bigger problems if quantum computers are there. And so like elliptical curve, basically anything using elliptical curve, which is a kind of an algorithm to do like generate keys, is going to have problems, right? So like, I mean, we're not even talking about just Bitcoin here, right? We're talking about like all of the cryptography that we've relied on in the last 20 years is going to be at risk for not being computationally that hard to solve and to figure out what it is. So in theory, it might actually be easier to just figure out what the private key to your address is that holds a lot of Bitcoin rather than trying to mine it would be, because that actually might be a more profitable thing to do. And so the first quantum computers that can do that, I mean, you better believe every intelligence agency in the world's pushing for that, because they're going to be able to break a lot of encryption that we think is secure today, based on that. So while I think you're absolutely right in what you said, I think that's probably not a reasonable solution until but here's the other side of things. So before that would happen, it would take an entity who has a lot of money to want to do that, for a small amount of block rewards, as we know is going to happen in the halvening. So I think the address attack vector is probably going to be more plausible. But at the same time, if quantum computers become available to like everybody, like a desktop computer today, then everybody's just going to switch to that, and then the network's going to stabilize, right? Because everybody will have the same hardware again. Even if that does happen, I think it's going to be short-lived, right? Maybe for a year, maybe even less than that, where you would see those really long block times, which would not be good, because that's how you do transactions on the blockchain. So I think the whole cryptography space is in trouble if a really fast quantum computer is created and no one else has it. I'll put it that.
And then we need to do upgrades to security, right? That's the next step.
Well, we got it. I mean, there's quantum safe like algorithms out there, but it takes time to migrate everything. And so if there's something out there, there's like an active threat, I think there's going to be a lot more attention in that space migrating. A cryptocurrency that I've been involved with before has used like trinary, right, instead of binary, which is kind of crazy altogether. But it's supposedly quantum safe, so that's their big pitch there.
And then going back to like one of the previous topics is essentially you would need to negotiate or figure out a way to either fork the Bitcoin chain and or figure out a way to literally upgrade all the nodes at the same time to make this.
Yeah, I mean, and that's more or less what fork is, right? Like there's soft forks and hard forks, but there's basically some block height that when it hits it, like you're supposed to be running new software, and like the network has all these cool things that basically like as more nodes start to join that are running the newer software, they actually block connections from the older software, and so they force a separation between the older nodes that haven't upgraded and then the newer ones. And then as long as the miners are using the new node software and they're mining in there, then that fork kind of just moves off in a different direction, and then like the fork that has more hash rate ends up becoming the main fork, and then the sub fork that has less hash rate. I mean, we saw this with like Ethereum Classic and Ethereum. So they had that whole DAO hack. I don't know. I'm not sure how familiar people are with that. But basically, a big network breach. People lost a lot of money. So the Ethereum Foundation said we're going to roll back the chain and fork it and give everybody their money back, and everybody was happy. But then there was half the people who were like, no, that's not how this works.
Yeah,
right?
that shouldn't be how it works, right? Like
immutable, and we're going to keep mining the old chain. In fact, there's this really cool story. I'll have to dig it up and post a link to it. But it was like the guy that made like 90 grand from mining Ethereum Classic, the original Ethereum chain. He just never switched. And then like all of a sudden, like the blockchain forked, and then he was like the only one mining it for like a week. And then people started to mine with him. And then that Ethereum Classic just became a thing, and kind of took a life of its own.
Well, one of those we're going to run over on time on this because I do want to summarize, but like one of the big things that happened with Binance, like one of these big exchanges, like we mentioned Coinbase and Gemini, all stuff, but Binance is another big exchange, and they got hacked for 7,000 Bitcoins, I think, which was worth like $50 million at the time or whatever it was, whatever the price was. But CZ, their CEO, went on Twitter or did a live stream and said, maybe we should figure out a way to roll back the Bitcoin blockchain, and people went up in arms. They were like, no way. Like, how could you even, think about doing that? Because that literally defeats the entire
you know how he was proposing to do that? Did you read the details on that?
Like what? Like forming some consortium between all the big miners?
He was going to say, so 7,000 Bitcoins worth some amount of money, right? So you take a portion of that money and he would pay a mining, somebody who's controlling most of the hash rate on the network to say, start rejecting these blocks, pull the chain back to this point in time and mine from there on, and like try to force a network fork basically. Which everybody was like, no, that is not, like, it's just easier if we blacklist those Bitcoins and just not allow exchanges to move them around. Now there's ways of, transferring them, selling to people peer to peer, but it's going to take a lot longer for those people, whoever stole it, right, to like actually get their, money in cash or fiat currency. So,
but on that point, so like now talking about blacklisted Bitcoins, the Bitcoins that exist in the address are blacklisted. Now, you said you like doing peer-to-peer exchanges, right? Now, if you go meet with someone who owns that address and they sell you a Bitcoin. Now, the exchange could quite literally blacklist your address now, making all the Bitcoins in your address blacklisted as well. Is that possible?
Yeah, absolutely. I mean, that's why there's those things like CoinJoin and those coin tumblers where like you transfer it in and it spins it around and sends you a different one out. That way,
Oh,
it kind of does some like obfuscation of where all of that came from. But yeah, I mean that's a problem. In fact, people pay premiums for newly minted Coinbases. Like when I say Coinbase, I'm talking about the actual blockchain Coinbase or the transaction Coinbase, so that it came from a mining, directly from a mining wallet, right? That means it has no history before that, so it'll never be whitelisted. I mean, people actually pay a premium for that.
huh.
I've actually heard cases of that. So,
That's
yeah, you got to be careful because if you buy peer to peer like that and it's blacklisted at those exchanges, then yeah, they probably won't let you withdraw it or even transfer it in, or you might transfer it in and they hold it for you,
yeah.
like and can't get it out.
That's like something. That's something that really baffles me. I mean, I saw an interview with Steve Mnuchin. Those of you who aren't familiar, he's the Secretary of Treasury for the U.S. government. He was basically on there saying, yeah, I think it's just because he doesn't understand crypto and he just doesn't understand Bitcoin, right? Like he's just all about U.S. dollar, this. But according to his comments, is that Bitcoin is basically the prime use target for criminal activity. And the interviewer basically said, yeah, but that's what the US dollar has been used for basically forever. And if you think about it, you can't really track a US dollar very easily. You have the serial code on there, and, okay, fine, let's take a magnifying glass to it and compare it to whatever was issued. But when you're talking about digitally tracking a coin across a blockchain, you literally have every single hash as it gets transferred down the line. Like, you'd think that the government would want to adopt this. You'd think that it would actually help them keep track of everything.
I completely agree. I mean, it's a public ledger of where those coins have moved to. I just think if they were to go out and say, yeah, we should adopt this, it would undermine the US dollar, right? Which is, I think, what they're struggling with. And that's why there's all this talk of like governments issuing their own digital currency, right? Which kind of defeats the purpose of Bitcoin altogether, in my mind at least, where it's like, look, we want something that isn't centrally controlled. We want something that's immutable, and we want something that doesn't have inflationary properties, right? I mean, and having a government, cryptocurrency, I think that would probably violate a lot of those principles. So, yeah, I just
in a way again, because they could roll back and they could do whatever they want to their chain.
Yeah, I mean, it's like a version of the U.S. banking system, but then it's like a digital cash, right? Yeah. And so I think that's what if they could convert the U.S. dollar over to that, they would do it in a heartbeat. Because, like you said, if they had a public ledger for every dollar bill that went around, I mean, they could do some serious introspection on it and know where the money's going, watch for big flows of money. I honestly think that's something that would be beneficial to them. So
you could probably reduce the employment at the IRS by like 1/100th. Yeah. You wouldn't need that many people, crunching numbers over there anymore because it just all be done on a computer. Okay, cool. So yeah, we can maybe, if there's time, we can talk about this a little bit more. But yeah, so we have the last topic here, altcoins. And I just want to kind of give this high view. Actually, real quick on the mining topic, just going back here. So long story short, summary here was that if you are trying to mine Bitcoin right now, probably not in your best interest unless you want to throw a shit ton of money at it. Otherwise, you're better off just kind of buying it. If you really want Bitcoin, take that money, buy it. If you want to mine other coins, and this is the segue into altcoins, there are lots of opportunities to still mine these other coins. You're going to want to go do your own research, but maybe we can talk about that a little bit more in the altcoin lightning discussion. So I'm going to hit the timer again.
Okay.
10 minutes at the top. Boom. So altcoins. What are altcoins?
They're alternative coins to Bitcoin. So they either have a direct ancestry to Bitcoin, or they're actually started from a new code base completely. There's examples of both of those, but it's basically everything that's not Bitcoin is an altcoin.
Okay, and so one of the first altcoins, and you've already kind of talked about this, is Ethereum.
Yeah.
Right?
Yep. So yeah, Ethereum was supposed to be this world computer, and have a Turing complete like programming language, and all of this cool stuff, and to some extent they've had some good successes. I mean, they actually have apps that are built on top of them, and I think the downfall to that is the scalability, right? And this is something that I think is really interesting in this space. There's there's been a couple of good talks on it, but basically, yeah, scalability is like everything that's always talked about with either Bitcoin or Ethereum or any of these cryptocurrencies. Like, can it scale? And I think you have to kind of look at like what the internet's done in its age. Like, so we used to have dial-up modems and all of that stuff, and then we got to broadband. And as the demand increased for the internet, like the engineers figured out a way to make it scale until like we're here doing Zoom calls like every day, 24/7, because everybody's quarantined at home. You know, the scale will be there when there's the demand for it. You know, there might be some bumpy road as you're trying to work that out. But I think if the demand is there from the users, there will be the scale. And so I think that's Ethereum's problem right now, is that they're trying to figure out if they got the demand to really scale out and find the right solution for that. And I think Bitcoin's been challenged on that as well.
But so let's compare a little bit, because when we talk about scalability, it's kind of maybe difficult to understand why scalability is so difficult on a blockchain, and more particularly, we haven't really said this word that much, a decentralized blockchain, because the difference between the internet, right, and say a decentralized blockchain is that when you submit a transaction or when you submit a packet to the internet, right, like this packet travels to a centralized entity and everything is handled and then sent back out from that centralized entity back to you. Right now, it might bounce off certain areas, right? But when you're talking about a decentralized entity, what's happening is you send out your packet or your transaction, then it needs to be verified and then updated across the entire network, right? So if you're talking about Bitcoin, a blockchain having tens of thousands of nodes and needs this many confirmations, well, then you can only really handle so many transactions per second. I mean, if you can even only imagine the amount of packets that are being sent, like on the Visa network every day, right?
Yeah.
Like that's
well, and there's different approaches to figuring the scaling thing out. Like, so Bitcoin, they have the Lightning Network, right, which actually anchors physical BTC or Bitcoin, sorry, and then allows you to do like micro transactions very quickly. Now, it's a fairly complicated setup. It's not. I mean, it's kind of neat because the idea of the Lightning Network was like, okay, let's enable e-commerce. I think that's one of the main goals of it, was to basically produce invoices. So if you need to pay me for like a t-shirt that I'm going to send you, I send you an invoice over the Lightning Network, and you can just pay that invoice, and then it's settled like almost instantly, right, through these payment channels. So I mean, they have some pretty neat solutions. I think the problem is it's all still really complicated. I mean, for a novice user to jump in there and start using the Lightning Network and all that stuff, I mean, it's got some rough edges. So I mean, there are ways of making the scale, but I think this is just like, it's the evolution. Like, as there's a need for that the engineering will be put into like, focusing on that and like scale it out. I think one of the things that I see as a potential problem is the blockchain size. So to really run your own node, you have to have the whole copy of the blockchain, so you want to be able to verify everything in it that was the way you think it is. And it's growing exponentially right now. If there's more transactions, that size of the blockchain is going to get larger, right? And so we have to have a better way of dealing with that. Like, a couple of I think Bitcoin has this now, but a lot of the other altcoins have like a pruning mode where you're like, hey, look, I don't care about the last year. I only care about the last year of blockchain. So I'll just take that chunk so I don't have to use up as much space on my computer, right? But in theory, you want to be able to verify the whole thing, right? If you really want to be secure about all of this. So, there's trade-offs right now. But yeah, I think that's where kind of everything's stuck right now, at least on the Bitcoins, is like, how do you scale to the next, 20 million, 50 million users of this?
Yeah, so you have, I mean, it's interesting. You just made me think about how, like, I could probably go grab a coin that was, sent into my wallet, and I could probably trace that back. I mean, I don't know, maybe I can't. I've never tried it, but maybe I could trace that back to an existing transaction all the way from 2009.
Yeah. You absolutely could, with a block explorer. So yeah, and Ethereum's kind of interesting because they have this idea of dApps, right, which is decentralized applications. That was kind of their novel idea, is to allow developers to build an SDK or to provide an SDK for developers to build a decentralized app to basically take inputs and then do outputs and have it be like programmable. So like this code was running on all the decentralized nodes on the network, and that's actually a pretty novel concept at the time, and I think that's why Ethereum was so successful.
Well, so I don't want to. Wasn't it also that Ethereum? I mean, in order to have a dApp, you have to have a smart contract. So I think like
Yeah.
one of the main aspects was like, and this was something that I wanted to include on this talk, but maybe we'll just save it for another one, was smart
Yeah, that's fine.
contracts and decentralized applications. Um,
Mhm.
they're really fun, and in fact, I didn't really latch on to Ethereum, even though I should have. I did get into it a little bit back in 2017, but I really grew an affinity towards Tron, and I know a lot of people
Yeah.
talk a lot of trash about that particular token and that chain and their CEO, but this kind of the way that they did this now, in a way, kind of breaks what a decentralized network and a blockchain really should be. Like if you look at like the maximalists who look at Bitcoin, but in a way, they did kind of find a way to get in the in between area for scalability because the way they do it is they have 27 super representatives
Right.
that basically function as the people who solve these blocks. And so if you reduce the amount of nodes that are necessary in order to function or in order to transact, then the speed of the network is quicker. And I think this is where Ethereum fails in that they're much slower because they're more truly decentralized. Whereas Tron
Right.
is much faster because they are not truly decentralized. And so these are like these different altcoins that come up with these different ideas. So you look at like Bitcoin is blockchain 1.0. Ethereum was kind of blockchain 2.0, where they're like, oh, we can do smart contracts, truly decentralized. Here's decentralized applications, and here's your SDK to build on this chain. And then Tron is kind of like, they're calling blockchain 3.0, where now it's like, okay, we take the best of both worlds, even though,
It's a
of
hybrid.
course,
Yeah.
but there, of course, there's people on both sides saying like, no, this is wrong and this is right, right? So there's really no right way. I don't know.
Yeah, I mean, I think that it's you're going to let the people. It's going to be like usability, how easy it is to build the apps on there, how fast it is. I think you're going to find a balance, right, of centralization to decentralization for what really works. One thing that I'm particularly interested in, I know we've talked about this before, is like privacy, right? Being able to not have that public ledger for all your transactions. Because if you think about it, I mean, our banking system, the way we traditionally deal with it is no one can see into your. I can't tell what's in Robert's bank account right now and all the transactions he's making. And I think you probably prefer it that way, right? I mean, I think just everybody kind of wants their bank account to be a private, personal thing, and really you don't get that with Bitcoin or Ethereum or anything like that. So yeah, I really focus on like. Privacy, because I think that was like Satoshi's true vision, and he's even been quoted in like the forums and stuff saying that like if you could find a way to do Bitcoin, but do it in a way that was private, that would be like the ultimate Bitcoin. And so that's kind of my views on altcoins. Is I'm looking for the best privacy solution possible.
So, so on that note, there are kind of mechanisms. Like don't want to disillusion people and say like they're if you get into crypto you just lose all your privacy, right? Like I mean you
Right.
have an address, you have a wallet, it's not linked to your name. So I mean essentially you only become visible when you decide to become visible.
Yep,
And
that's
then
true.
yeah, and then on another note, um, there are ways to disguise, if anything, like once you become visible to then become invisible again, like through atomic swapping and stuff like that.
Right.
And I don't mean this in a way to evade a government. I pay taxes, everyone should pay taxes. I mean this in a way to once again regain your privacy, as Tyler was talking about with regards to hiding your assets from the public, right? I mean, like, you don't want to be going out into the public saying, I got $5,000 in my pocket, right? Like, that's like, why would you do that
No,
walking
no.
down the street?
Well, I think you have an inherent right to privacy
Yeah,
that you should get inherently, and then you, like you said, you can expose it publicly if you want to, right? And I think that's the right model. I'm not saying that everything needs to be private because it's you want to do nefarious things with it. It's just like everybody has this right to privacy, and that they can decide if they want to be public about it. And I think that's fine, and I think that's what we should all strive for.
yeah, agree. So altcoins in general
Yeah.
have found different niches and ways to kind of accent themselves away from what Bitcoin originally did. So they kind of take that model and they add a niche here, a niche there, and some of these altcoins are actually very interesting. And if you look at like that original example with Ethereum, even within their network, you can create coins on their chain that are like kind of like altcoins. So one more layer of abstraction where now you have someone who builds a decentralized application, and for their application they want to have a coin that governs their application, but their coin is now tied to Ethereum, which is tied to Bitcoin. And so, like, you have layers of abstraction that bring you into that decentralized application layer. A coin that is traded on the Ethereum network. It uses the Ethereum network to not trade Ethereum. It's a coin that's on that network.
And while that's like a novel, I also honestly think that it people trying to get into cryptocurrency, they see all this and they're just like, why is there so many, right? Why is there so many of these different coins? And I'm kind of with them on that. I would really like to see some consolidation around this, because you got to think about all this money is being spent on development, doing different things. And if it's like, hey, look, here's the 5 things that we want to really tackle, and these kind of coins are doing the right things here, so let's all focus on that, we would have a better experience, in my opinion. But I just think that there's such a land grab right now, because cryptocurrency is like, a relatively new concept in like mainstream, right? People are becoming more familiar with it, and we're having like, things like Coinbase and stuff kind of bring it to the mainstream market. Is that people are looking for all of these different ways to, like interact with them, and there's just so many options.
The way I kind of look at it, because I like that point, Tyler. I don't know. It's already 10 minutes after the hour. Do you have to get going?
No, we can do this for a few more minutes.
Okay, cool. So the way I look at it is like this. Like, imagine like you look at the stock market, right? And this is kind of how I try to explain it to some people. And this is just an opinion. But if you look at the stock market and, you're a trader, you go in and you buy a Microsoft share, right? Well, in order to buy that Microsoft share, what was the process you had to go through? And I'm not saying setting up a crypto account or a wallet is much different, but when you go and buy a Microsoft share, you go to your exchange or your bank account, your bank, you set up your brokerage account, and then you submit your transaction to that exchange's network. Now, they go through the necessary centralized exchange, whatever they do, and then they issue you a share of Microsoft, and that goes into your account, and you can see it on your phone. You own 1 share of Microsoft, and it pays dividends, and this is how many shares there are on the volume that's traded every day. Very similar to the crypto industry in that regards. The difference here is that now that I own this Microsoft share, I don't need to go through that I don't need to go through that brokerage anymore to send it to my friend. This Microsoft share now becomes mine, and I can actually send it straight to Tyler without having to go through a centralized entity anymore. And this is a little bit of a difference. And so when I kind of like try to talk to people about this decentralized application and these altcoins, Bitcoin is kind of like your store of value, your gold, or whatever you want to call it. Not so good for transactions, but of course with innovations like the Lightning Network, it can become better. When you look at these altcoins, in a lot of ways, these altcoins represent companies that you can own at a very early phase. Now, the land grab part of it makes way for a lot of scams and vaporware-ish companies, but if you look at like internet era 1995,
I was just going to say that.
Yeah, the big boom, right? Like all these companies are trying to take advantage. How can I use the internet in the best way possible to build a company? These are these thousands of altcoins. So like you could throw a dart at a dartboard, buy 1 million of each of these coins, and then 99.9% of them might die, and one of them might see 20,000 gains. And you just don't know if they got the right idea and they use the blockchain, or they create a blockchain that's just so perfectly done. That's like
and I always try to go back when I'm looking at I just try to see who's funding this, why is there development. So like a lot of the altcoins that I really like, they're community funded, right? Meaning the community actually gives their own coins up to developers to work on specific tasks, right? This is like the open source software model, right? Here's all these things we want done, and we as a community want these things, done. And like, you don't get funding if you don't complete it, right? Like if you just like, okay, whatever, I'm not going to do that, and that was nice, have a nice day. Well, you're not going to get funded next time, right? And so it keeps developers honest, who like, because you're investing in their time, right? You're paying for their engineering through this process, and so you're funding this. You have a little bit of a say, a little bit of a vote, like a shareholder. I really like that model. I think that's kind of what I look for in the fundamentals of any of these coins. Is like, is there a foundation? Is there a business entity that's actually funding all of this underlying technology? And like, do I have a share in their company? No, I don't really, right? Because it's not. They're kind of the ones that benefit from it. Or is this a community grassroots movement? And maybe I'm just a little old school in that that aspect where, you know, that's kind of how Bitcoin was started. And so that's kind of what I'm into and what I look for in the other kind of altcoins. But there's enough out there to choose from and spend a lot of time researching. So
I think that's one of the key points too, is that, you know, spend time researching and reading.
Yeah, and really understand, you know, what the value is, where this is going to be, you know, in a year's time, right? Because so much changes in this industry, right? And it's moving so quickly that, you know, you really have to understand, like, long term where you want to be. What I really like to see is like researchers working on the product, the project. I mean, when you start to see that, you know, that gives me good feelings. Like, hey. People outside of this, like in academia, are interested in this this application, and so you could tell that there's going to be a lot of value that's going to be generated there.
Yeah, cool. Well, Tyler, I mean, I think it was fun. I had a lot of
Yeah,
fun.
let's do this again next week. Let's get a new set of topics. If anybody in the chat or just leave a comment on this video if you're watching it later, if you've got a topic, it doesn't have to be cryptocurrency based, but you know, we want to do technical talks. Like if we want to walk through how to get started mining. You know, we can do a quick on-air, you know, tutorial for that, or if we want to go into a specific part of the technical stuff, just let us know in the comments, you know, on the live stream comments or in the comments below, or send us a message, me or Robert, on Discord, and we can take that feedback and roll it into next week's. Yeah, or I guess we could probably, I think we're going to do it, maybe not next week, but we might do it sometime soon. We'll have to plan that out.
Yeah, and if we don't get any feedback, we're just going to pick something out and shove it down your throats anyways. No, Tyler, it was awesome. Thank you so much. This is cool. Yeah. I think that definitely we will be back. We will be doing this again. And yeah, I'm going to close this out. I think if I click that again, it goes dark. All right, cool.
Cool.
Thank you. Take a look down in the description. We will definitely leave some links. I'll comb through the video, and if there's something that I see or hear that I can throw into the description, I will. Stay tuned for next time. Link to the Discord server will for sure be in the description. So if you want to join us on the Discord server, Tyler and I hang out there basically all day. And there is a channel in that server for talking about this kind of stuff. This is devEco Live. Thank you for joining, Tyler. Oh, you muted.
I'm muted. Thank you very much for having me, Robert. This was a lot of fun. Let's do it again sometime soon.
All right. Ending the stream now. Take care.